Hello traders, Gary Wagner here, approximately 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 27th day of November 2013, and this is the daily report for gold and silver. First and foremost, I want to wish all of those in the United States that celebrate Thanksgiving a very, very happy Thanksgiving and a prosperous holiday season. To those who do not live in the mainland, I wish you a very, very happy Thanksgiving, for we all have a lot to be thankful for on this holiday season. To the markets, we do have quiet markets, but they are trading slightly lower this morning, and that's after coming off a little rally that happened over the evening. As you can see, currently we do have gold trading roughly at $12.38, $12.37, putting it off $3 and change on the day. Now, it's had a high of $55.80. You can see this high right here, and we are trading near the lows, which is $35.90. Now, on a technical basis, we do have silver just breaking below the kind of last area that I looked at as a potential for support, that being 1967. Market is trading at 1964, so it's just below that point. It's off about a dime today. Low 59, high 2021. We'll talk about silver a little bit more towards the end of the show. So getting back to gold, I do want to look at it through the eyes of the 60-minute chart, because I think that there's some really good, solid information that we can glean from this chart. Now, first of all, if you recall, yesterday I had asked all of our clients, or suggested, I should say, that we all trail stops down to just above 1260. I believe that the trade recommendation said to place your stop at 1261. Here's the reason why. When we look at this market and the way that it traded down, it hits a low. This is the low of 1225. And when it pops back up, it hits a high that's just below this 50% retracement of this fall from, call it 1300, just shy of 1300 actually, to 1225, and this is the 50%. So we see the market come up, but it fails to take out or even challenge this particular area. It made sense to me as this market came back down that as long as it traded within a range and wasn't going to break from the downward spiral that it's been on, it probably would not be able to go above 1260. Then, when we take a look at the recent activity, we had the market come under some pressure just the other day. This is the 26th. This is yesterday. We had closes roughly at the 42 area. You can see that right here. But last night, we did see a nice little pop in the market. This coming out as it was reported that U.S. airplanes went into space that was considered neutral space, but that China was claiming now as part of their sovereign airspace, and that one would need to basically let them know when they were going to fly into that. The United States, testing that stance, went ahead and just flew into it. That little bit of tension, as you can see, popped the market back up. But on a technical basis, because to be honest with you, when we try to figure out fundamental news, it leaves us in the dust in many, many occasions. But on a technical basis, we can absolutely see this double top right in here at about, call it 1255, and we can see that at least for right now, there is some real resistance in the marketplace here, and it is currently trading just off of the close yesterday, which was roughly this area here. We can see where it changes into 1227. This is the nighttime session. Of course, this is the daytime session here. Now, we're going into a Thanksgiving weekend in which the markets in the United States will be closed tomorrow, and there will be a shortened exchange time on Friday. So therefore, we will most likely come out with our email newsletter as well as our strategies in writing, but probably not a video show on Friday. But we will come out with something, and we will, of course, as always, monitor the markets. So traders, really, what is my outlook right now? Well, the key right now is we are at a fairly precarious area. We're back to that really the 1240 area. We're just below that, and I'll have to pull up the 720-minute chart to show you where some of the technicals come into play there. But just on this 60-minute chart, we really don't have any major support until we get to 1225. Now, we are looking at a 720-minute chart, and in this chart, in essence, the one Fibonacci retracement we want to pay attention to is the 1180 to the market running all the way up to about 1435. Line in the sand is the line that it's currently trading below, because that line in the sand, I've just covered it up, but is roughly at 1240. It's a 76% retracement, and it's a 76% retracement of this entire rally. And what that says is if it's breaking through this particular price point and trading below it, it's saying that this rally can no way be construed as it is a bullish rally, but not within any kind of a bull run. A breakthrough this really gives us technical data that confirms that we're still deeply, deeply, deeply entranced in a bear market and a bear run in the precious metals markets. And traders, I truly believe that the key right now to the precious metals markets, besides the world scenario and what's happening in terms of certain countries, is got to be the Standard & Poor's. It's got to be our equities markets, because it's a runaway freight train. You can see this going to new record highs. S&P now above 1,800, Dow above 1,600 on a closing basis. And my sense is that we'll probably see a trade sideways to higher through Christmas, maybe at the beginning of the year. We're going to get some sort of a pullback. In terms of our Elliott wave count, and I will sometime next week show you my our Elliott wave chart for the S&P, but we're looking at it currently is the fact that we are in a long wave 3 up, and when that corrective wave 4 comes in, we will probably be at the end of the 5th wave in gold and see a bounce in gold to the upside and a move down in the equities. Now, I did get an email the other day that I kind of want to address, because I feel if I get the email from one or two, means that many of our subscribers might be pondering these same questions. So it's absolutely something I want to address. And basically what the email said was that I am looking for lower prices in gold, but there are analysts right now that are looking for a substantial correction in the equities markets. How can we have lower pricing in gold and lower pricing in the equities at the same time? Now, to answer that question directly, first of all, nobody knows what's going to happen. We create models and we see how it unfolds, and then we take our models and adjust to new data that comes in. Now, when the equities are running strong, gold is going to be under pressure. Simply put, liquidity theory takes over, meaning that large institutional fund managers are putting their money into equities rather than the precious metals. They're going to put the money where they're getting the best of all returns. Now, Paul Volcker said it best, trees don't grow to the sky, never have, never will. So there's going to be points in which this market corrects. I'm talking about the equities markets. Is it going to crash? Well, personally, I don't think so, but I think that we're probably at some point going to see a dynamic correction. At least that's been historically what we've seen. Now, this is, of course, is the 2008 crash. I'm not looking for something like this, but whether you see dips like here or dips like here, we are getting small corrections, but not the kind of big, 5 or 7% corrections that some are calling for. Is a correction in the S&Ps, in the equities markets imminent? Well, I believe it's quite possible. But once again, I'm just working with models, and the model that I'm working with in the equities says that we're going to have a pretty strong corrective wave, but that will be followed by yet another dynamic rally, which takes us to new all-time highs. That's my take on it, and that's based upon the models that we've worked with, and I hope that that answers the question of the email that I got last night. And then finally, I do want to turn to our weekly chart. This has got our intermediate count. The intermediate count is really the model that I've been using that has really had me come out on record and say I'm looking for lower prices, because my sense is that if we are in this solid bear count, and that seems to be how it's unfolding, wave 5 will typically at least equal or go to, this would be called a flat, the low that we got in wave 3. That is the basis really for me looking for lower pricing. I am a staunch technician. I am a hybrid technician, meaning that I look at all the fundamental data out there, but I look at the technicals really to guide our specific trades and our exit and strategies for stop placement as well as exiting the trade. Based upon this model, there's a real strong conviction that I have that we could in fact see lower prices. The other thing that I'm looking at on a technical basis is the fact that I've got two different fib retracements. This shorter one really starts from about 1150 right after the market tops out at 1250, comes back down. I put a fib retracement in here, and the 76% is 1252, and we have broken below there. The next real significant level doesn't come in until about 1150, and then 1181, of course, is that low. That's right here. And so, again, on a technical basis, this is where I believe the market is going to. Now, can that change? Fundamental data will change the technicals on a dime, because if the market has news in there that conveys a logical reason for people to start having bullish sentiment about the precious metals markets, you'll see it turn on a dime. Now, what kind of news could that be? Well, whether it is just a breakdown in the talks just prior to January 15th about the debt ceiling, whether it's potential conflict between China and the United States, whether it's something going on in the Middle East. There is a number of factors that can absolutely influence market sentiment. And as market sentiment changes, so does the reflection in the way they place their bets. And that being said, I'm still looking for lower pricing, but realize that can change at any moment if the fundamentals behind the current environment change along with it. And lastly, we'll look at silver. And as you know, I truly believe that there's going to be an opportunity for those that buy physical silver to look to buy low $18 silver. I think that that's quite possible. We have really broken through this area, but we haven't broken hard. We have quiet market activity as we go into the holiday season, and we are trading just at this point. This is clearly not a break below this. This could later on prove to be a very supportive area. Take a look at this cluster here. You have this cluster here absolutely dipping below these points and dipping below substantially. They're also trading above these points. It really doesn't know where it wants to go till you get this dramatic parabolic rise. And this dramatic parabolic rise, of course, you've got $18, comes up, kind of floats around 19.5, flirts with 20 for a little while, comes back down and it pops back up all the way to $25 per ounce before this parabolic rally subsided. This has been Gary Wagner wishing you the best of all holidays. Wherever you live, believe me, we all have a lot to be thankful for. We'll speak to you after the holidays. Have a great day. Bye-bye.